Good morning, everybody. Welcome to the Moving Market Podcast. It is Monday, November the 10th, 2025. Stock market has been open for almost 2 hours right now. I'm doing this podcast today considerably earlier than what I normally do. I'll tell you a couple of, well, the main reason why is because I already have the Signal newsletter sent out. I want to give a little explanation of our new trade. I already have triple play trades sent out for the day, and I've got some afternoon and evening plans because I've got a granddaughter that is 1 year old today. So we're going to have to do some family stuff this afternoon, this evening, and I'm not going to be available at the close of the market to do this the way I normally do it time-wise. So here we are a couple hours into trading. The Dow Jones Industrial Average just barely positive, and only moments ago as I was starting the presentation, the Dow was a tiny bit negative. The Nasdaq is up very nicely, a little over 1.33%. The S&P having a solid day, up 0.75%. The Dow is kind of odd today because it's been up as high as 160, 170 points, I think. The Dow was having a pretty good day, and then it shrugged a lot of that off. You can see it started high and has just very, very steadily in 2 hours, 1.75 hours just dropped. It hasn't dropped into oblivion. Like I said, it's basically that's about as close to break even as you can get right now, and it's changing every few seconds. The Dow seems to be struggling primarily because Home Depot, I think that was the one having a really tough day. And I believe Home Depot is now, Goldman Sachs is the heaviest weighted stock, but Home Depot and American Express and United Health, all very heavily weighted stocks, and they're all down between 1% and 2% today. More than half of the Dow Jones components are actually trading to the upside right now. It's better than half of them that are trading positive. But the fact that Home Depot is one of those heavier weighted stocks, I think in terms of total market weight, Home Depot was fourth, maybe fifth. You've got Goldman Sachs, Caterpillar, Microsoft, and American Express are the ones that are trade a little, and American Express by less than $1. And the volume is pretty high on the Home Depot sell-off. So Home Depot down a couple dollars a share, and I'm not even sure. I don't even know what the news is driving Home Depot. Not sure why they're struggling today. Down $7.50, a little over 2%. As I scan headlines right now, I don't see. JP Morgan lowered Home Depot's price target. That's probably it, as much or more than anything else. Although earlier this morning, Barclays got a buy rating from Home Depot. So it's a seesaw of information. But that's the biggest drag right now on the Dow. Like I said, the Dow is going back and forth from positive to negative. It was negative a second ago, still a little bit negative, but the Nasdaq holding on to some solid gains and the S&P holding on to some solid gains, and that is in large part the rebound is because of the big sell-off last week. I think there's two things going on. The big sell-off last week, it was a very rough week for the S&P. It was a really rough week for the Nasdaq. I believe I heard a couple of times that it was the worst week for the Nasdaq since April. And a lot of that was the really big drop on Thursday, followed by a little bit more on Friday. Friday came back up to where the Dow and the S&P got into positive territory. The Nasdaq almost made it back, not quite, but still worst week since April. And so it should be rebounding right now. There wasn't. I don't know that there was a real legitimate good reason for the sell-off. I mean, that's not to say it didn't happen. It doesn't matter whether I think there's a reason for it or not. What happened. It's just that it's cyclical. It's a part of what we've talked about multiple times in the last few weeks, especially where we get these dips, we get a bull run, we get a dip, we get a bull run, we get a dip, we get a bull run, we get a dip, we get a bull run. They seem to be in the last couple months a little more exaggerated. I know some of that has to do with the government shutdown, and that's the other reason why we're moving up today is all of the news about the end of the government shutdown. Eight Democrat senators voted with some Republicans last night, or with most of the Republicans last night, to do a procedural move that then opens things up for a vote, I think today or tomorrow. Worst case scenario, a vote that would be the end of this week, but a vote that will set up a continuing resolution for all spending through the end of January, and a few things, a farm bill and a military bill that will go all the way till the end of next year. So that's generated some optimism and is kind of the catalyst, I think, behind today's move. Hopefully the Dow and the negative momentum there, which is still odd to me because, like I said, over half the Dow companies are trading to the upside. NVIDIA being the biggest, followed by 3M, followed by IBM. All of the tech stocks seem to be doing well, with the exception of Salesforce, which is down a little bit today. But hopefully the negative move on the Dow will not have a drastic impact on pulling other things down. Everything is so tied together now with mutual funds and hedge funds that it's hard sometimes for that to not happen. So with that said, let's look at the new trade that we're putting on. Palantir. I did a trade for the triple play portfolio, and I did a trade for a regular spread trade portfolio. The spread trade portfolio, not quite as long a term trade as the last couple of bull call calendars we've put on, but we're going to a slightly shorter term. Still we're going out to April on the long call at 190, 195, I think, and then December on a 200 short call. My expectation is that this was a little bit of a fluke between Friday and today, and I expect this will continue. You're going to see this crossover that came reverse. You're going to see this reverse. We did not get a full technical crossover on the MACD indicator. In fact, honestly, it didn't even come really close. And so I think with Friday's move and with today's move, and I think there will be more of it, you'll get back onto a bullish trend, and Palantir will be back testing new all-time highs within a few weeks, 2 to 3 weeks. I don't know that there won't be an occasional sell-off day in there, even on some of these, steady, strong bullish runs. You get those occasional 2-3 days of sell-off. This is a really nice run here that did not come without a few days of sell-off. And even this big run right up here came with one day that it sold off a little bit. So I expect that'll continue to be the case as we go forward with Palantir. There'll be the occasional give back day, but I don't expect a lot of that. I think they're back up to 210 or close to 210, which 210 would be an all-time high, but I think they get back up close to there before the end of November. Maybe the first week in December. On the triple play side, this is the first time I've ever done three. I think the first time I've done 3 in the money bull call spreads. The one on Tesla, I think, is going to be the easiest one to get profit because I went clear down here to a 425 short call. The one on Palantir, I wish I would have waited a little while to place it. I placed it when the stock was a little bit higher. Went to a 185 short call strike with a 180 long call strike. I think we'll be fine on Palantir. That is a very good, strong level of support now that it's been tested. So I'm very optimistic for that one. And then the other one I did was on Marvell. Marvell, I suspect Marvell is just going to continue this run that it's on. I think it will get back up. Maybe not this week, but by the end of this week, I think it'll be back above 95. We're at 90 and 85 respectively on the strike prices of our short call and our long call. So I really like this. All 3 in the money bull calls. So you treat them kind of like a bull put spread. The one thing about these trades is you have to be kind of quick on the trigger to adjust or to exit the trade if it starts to go against you. Now, if there's one, if you get like one super, super ugly, horrible day where it's just all of a sudden your short call is out of the money, your long call is close to being out of the money, your choices are you roll it out in time and hope that that's just a one-off fluke day, or if you think it's not a one-off fluke day, you got to roll it right into a bear call and take your chances on exiting quickly if the bear call spread doesn't pay off the way you need it to. So those are the new trades for the week. Our collar trades are looking fantastic. We will make some adjustments early this week, but probably not today. And that's in part because of my schedule, but there's no urgency to make an adjustment on any of them today. So looking good overall. I'm going to wrap up right there, get this recording online. And tomorrow I will probably do a podcast in the morning again, only because we want to talk about everyone who got filled on the Palantir trade and kind of where we're at with that. So I'm going to wrap up right there. Have a great rest of your Monday, everyone. Thanks. Bye-bye.